interesting one, because it's not often that you find publicly traded firms that have such a narrow focus in terms of products. Give us an idea of how business is right now and where areas of growth are for you.
Sure. Well, it's an exciting time to be at Lifeway. Our category is the probiotic dairy functional food space. And we are seeing just a booming explosion of business. Just the last 19 quarters have been year-over-year consecutive growth years for us. And that trend is not slowing down anytime soon.
Is that because of what's happening in terms of the way people think about products such as yours? Or are you doing things internally when it comes to product development, when it comes to placement, distribution, and the like? What are you attributing that to?
Yeah, I mean, I think it's both. I think, first of all, to just step back a little bit, I think people really want to know where their products are coming from, where the brands originate from. And I think Lifeway is really the embodiment of the American dream. It's just a remarkable story. As you mentioned, my dad we all came from the former Soviet Union, and we were the first of 48 families that were settled in Chicago. And, this idea of living the American dream was something my father aspired to. And when he walked the grocery stores in America, he noticed that there was no kefir, which was a staple product for 2,000 years. Something that my ancestors, my grandmothers passed down generation to generation, and it was simply non-existent in the United States. And I think that, and so that's how Lifeway was started. And then he took it public 2 years later. But I think consumers really love that heritage story. They want to know that their brand came from someplace authentic and real, not just out of an AI private equity office or something like that. And so I think that 38 years of legacy that Lifeway has been bringing to American consumers and consumers globally is part of the reason. Additionally, with this really wonderful storied product past of my ancestors knowing intuitively that kefir improved their well-being, their health. They attributed their centurion, living to 100 years of age based on their consumption of kefir. And it wasn't until 1908 when Dr. Elie Metchnikoff, did the first round of science and research on kefir and probiotics and fermented dairies like kefir. And he found that it did indeed help improve the body's health. And today, modern science is only just catching up on the microbiome, friendly bacteria, probiotics, and kefir specifically. And so there's so much exciting medical research. And Lifeway is a brand that meets the moment. We are on every grocery store shelf across the United States, from Whole Foods and ultra premium markets to Walmart and Costco. Yeah,
that's what I wanted to talk about, because I was talking to somebody recently who has a startup-ish food company. They've raised quite a bit of money and they're pretty prominent, but she was telling me how difficult it is to get shelf space at some of these prominent retailers. How do you do it as, you're not independent in the sense of a startup, you're far from it, you're a publicly traded company, but you're not Dannon by any means, you're not Lactalis. So how do you do it? How do you compete with the big players?
Well, I think they compete with us. I think they aspire to be relevant, like Lifeway is. We have been very passionate and trend-setting from day one, and we still operate very nimble, and we are trend-setting. We aren't just following trends, but we're creating the trends. We have been, dedicated to putting a bottle of Lifeway kefir in everybody's hand, every consumer's hand, from cradle to grave, generation to generation, and building trial, showing up at culturally relevant events. Yoga, we were one of the first brands to partner with yoga studios across the country. You can try our samples, our products at Lollapalooza, at Austin City Limits, all different, really amazing cultural moments that are relevant for consumers. And the way that we show up to our consumers, educating them on the importance of gut health, is one of the reasons why we have had such tremendous success.
So Really interesting story, family story, publicly held company, small market cap, about $390 million. Stocks almost doubled year to date. Julia, I am curious though, talk us through some of the metrics, the type of growth that you're seeing, revenue, top line growth, earnings growth, cash coming in. What do you do to kind of keep growing the company?
Yeah, I mean, we have had the most incredible historic quarters. The last 5 quarters were record-breaking quarters. Like I mentioned, 19 consecutive quarters of year-over-year top-line growth. We just hit the second quarter this year. We almost hit $50 million, which has been a number we've had long circled in our aspirations. Up more than 25% this year. Our 2019 revenue went from about 93 million to almost 200 million right now, 200 million run rate. So we've doubled our revenue. While I don't obsess about the share price at all, I am very proud of the fact that in the last 5 years, our share price is up almost over 1,200%. So, these are some remarkable numbers. Our gross profit improved to a 92% increase. Our gross margin was up 290 basis points. Yeah. So this is the metrics that prove that, consumers are looking for Lifeway Kefir. We are taking market share away from other brands of other types of functional beverages or other kind of old stale products like yogurt. I think we're the more trendier, fashionable, healthier cousin of yogurt.
Hey, one thing we wanted to ask you is, nifty function on the Bloomberg where you can look at, your top shareholders, and Danone North America has about a 23%. Yeah, reported that back in September. And you guys confirmed a receipt of a proposal from Danone. They offered $25 a share. You guys right now trade at $26.40 a share. Is there an offer? Is that the future that you ultimately will maybe connect with this company? Danone will own you, or is the plan to kind of keep going alone?
Well, while I can't comment on that, I would like to point to the incredible success that we're having at Lifeway. We're on a really strong growth trajectory with a really long runway. And in terms of growing both our flagship product of kefir, but also an incredible, exciting, emerging category, which is not new for us, but new for the American people, which is farmer's cheese. And farmer's cheese is so exciting because maybe you've noticed that last year, cottage cheese went viral on TikTok. And it's all over. Everyone's making blended cottage cheese and various recipes like that on social media. And our farmer's cheese is one of our legacy products that we've been making for over 38 years. It's something my grandmother's made. Like I mentioned, twaróg in my language, it's called twaróg. Mm-hmm. And farmer's cheese is exploding, and we're really excited to be growing that category. We're the largest manufacturer of farmer's cheese today, and it's going to be really exciting to scale that into all of our locations where our kefir is currently sold, and bring this new category in the dairy space. Bioavailable, high quality protein is something that consumers are really looking for and they're craving. And that's something that Lifeway's really has been pioneering and paving for a long time in the natural food space, organic food space, which is now mass market. So that's a really exciting time for us.
We only have about a minute left, but what's your product pipeline look like, expansion beyond farmer's cheese and kefir?
Yeah, well, we are scaling our Pro Bugs, which is a pouched product for kids, pouched kefir product for kids that we innovated over 10 years ago, and we've really invested in some equipment and machinery to really scale that. We disrupted the entire baby food packaging space by launching the first ever pouch in the United States for kids. So we're excited to scale that into mass market. Right now, it's at Whole Foods nationwide. We also just announced the expansion of 10 exciting new trendy flavors, lactose-free. That's another big concern in the dairy space. People are looking for lactose-free products, which Lifeway offers. But they're really exciting flavors like taro, ube, matcha latte, lychee, really on trend, snackable, easy Instagrammable types of new products that we're excited to scale that nationwide as well. And then we have just like a long trajectory of new products in the pipeline, which I can't discuss just yet, but look for more things connected to skin gut access. We know that probiotics work really well on the skin or inside out. So some kind of skin-friendly products, brain gut access.
Okay, we'll come back and tell us more when you can give us some of the specifics, because that's super interesting. Julie Smolansky, CEO at Lifeway Foods, joining us from LA.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks in the red. 20 minutes to go ahead of the closing bell. Let's head right over to the first word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
That's right, Charlie. U.S. stocks are in the red right now, with the Dow currently down 379 points. S&P's dropped 22, while the NASDAQ is down by 2 points. The U.S. 10-year yield hits 4.18%. Gold is lower. Oil trading in the green. And Bitcoin, that's falling by 1.8%. Among the main 11 S&P sectors, only tech was in the green. Real estate and healthcare were in the red. And leaders to the upside in the Dow, Boeing and Apple, while Home Depot fell 2.5% and led to the downside. In other news, NVIDIA rose 3% to a new all-time high. And wrapping things up, Nucor reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type SQUA, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, as you know, we're just about 18 minutes away from the closing bell here on Wall Street. We talked about this with our John authors earlier, that Goldman Sachs is out saying that the S&P 500's decade of big gains is over. A Bloomberg survey, meantime, shows participants believe stocks will keep rallying into year-end, though the market is off to a slow start this week.
Come on.
What? I know.
Slow start this week. I'm sorry. The S&P 500 is up 22.5% so far this year. More than 20% gain last year. Okay.
It's had quite a run, as
really
you know.
has.
We
Yeah.
noted, like,
What are we supposed to do?
The weekly run.
What are investors supposed to do?
What are they supposed to do?
Yeah.
They're supposed to listen to our Drive to the Close
Okay.
guest. All right, so let's get to it. Miguel Sosa is head of market research and strategy at Blue Rock, joining us from San Diego, California. Miguel, good to have you here on Bloomberg Business Week. We've got Goldman Sachs saying, you know, the S&P 500's decade of big gains is over. There is also another story on the Bloomberg about insiders selling, which is never necessarily, or is most times not seen as a positive sentiment for gains in the equity market side of things. So how do you see it right now, this environment where we've seen quite a run up in stocks?
Sure. So it's been a different environment over the last 10 years versus where we are currently, right? In call it the previous decade, it was a low interest environment, extremely favorable for equity investing. Now it's been, for the last 2 years or so, a persistently higher interest rate environment, which poses a potential headwind for equity investors. Nonetheless, as was just mentioned now, we've seen 20+% yearly returns both this year and last year for the S&P 500. So at the end of the day, it's probably a more challenging environment for equity investing, but who's to say the S&P can do what it wishes?
It's
True words have never been spoken. S&P's going to S&P, Carol.
S&P's going to S&P. Very funny. Having said that, investors do have to make decisions, and there's a lot coming at them, whether it's geopolitics, whether it's the election outcome, whether it's, I saw a story that just crossed a little while ago, Neil Kashkari maybe talking about the Fed not needing to be so aggressive. Let me just get it right here because I want to make sure I don't say it incorrectly. Fed's Neil Kashkari sees slower pace of cuts over the coming quarters. Like we've seen a bit of a reset, too, about maybe expectations about what the Fed will do for the rest of this year, maybe into 2025. So as an investor, what do you tune out? What do you tune into in terms of making investment bets?
Yes, it's always challenging to certainly measure and predict where the Fed is going to be. If you recall back to the beginning of, or the middle of this year, the beginning of the summer, it was higher for longer. That was the mantra. There wasn't any change to that tune. And then come July, August, there was much more moderate economic data, inflation, jobs reports, and that's when we started to hear a pivot in the messaging towards a reduction in rates. We saw that come to fruition in September with the 50 basis point cut. And now I don't want to say another pivot, but certainly a new message of, okay, that was enough, and let's moderate the interest rate reduction. So at the end of the day, I think investors are seeing a robust and expanding economy, a healthy economy, and much more moderate inflation, which over the long term, over the medium term even, we should see a gradual reduction in interest rates. Whether it happens this year or the beginning of next year, it's going to be a slow process.
So where's the opportunity then?
I mean, you guys have what, some $18 billion in assets under management. Where are you putting investor money right now?
That's correct. And in our view, we're focused on two areas. One is private real estate. Private real estate has had a really tough run in this higher interest rate environment, but it's presenting some very attractive opportunities because valuations in real estate are down about 20%, but occupancy rates remain high. Net operating income has grown significantly over the last 5 years, so investors receive more cash flow, but at a discount because valuations are lower. And on top of the fact that interest rates, as they've moderated, cap rates have moderated as well, or cap rate increases. So we're not seeing any headwinds to real estate investing and valuation as we did over the last couple of years. So in our view, we're starting to see a bottoming in the decrease in real estate valuations there, which presents something very attractive. We're also seeing attractive opportunities in alternative credit. Also, given interest rates are higher, the tables have turned a little bit more in favor of lenders instead of borrowers.
So in terms of private real estate, where specifically? Office? Where are you finding the opportunities? And we've talked certainly around this table over the last couple of weeks, whether on surveillance. Last week we had a great guest, David Steinbach over at Hines, talking about that as deals get done, you get some transparency, right, on where the pricing is in the market, right? You get some clarity about that. But I am curious, when you're talking about private real estate, where are the opportunities for you guys?
Yes, we're staying away from office. Office has faced a challenging last several years, 5 years, and it will continue to be challenged. And in Blue Rock's view, we like to think of it as under-demolished, actually, because there's still some pain to go through there. But in our view, we like the industrial sector much more. There's persistent and structural benefits within investing in that particular sector because more of us continue to buy more products online, and we wanted those products delivered to our homes faster than ever. So that changes the demand for the warehouses that hold those products. Those warehouses have to be closer to where we live to get those products faster to our homes. And so that's creating a very, very persistent growth in demand for industrial and specifically logistics warehouses and last mile facilities. We also like the specialty sector. Specialty is really a catch-all term for everything that's not under the big four real estate. So you can think of specialties such as single-family rentals, data centers, life sciences. And these are exciting subsectors because there's little to no correlation to the overall economy. A simple example, think of data centers. We're all consuming data on our phones. We will continue paying our phone bills and our internet bills, regardless of whether it's, call it expansionary periods or recessionary periods. And so it's become a part of who we are and a necessity, right?
Hey, before you go, just got about 30, 40 seconds. I got to ask you, because private credit is your other world. And again, everybody seems to love private credit. We hear about it being kind of the golden days of private credit. PIMCO, our Bloomberg Intelligence Credit Edge podcast had PIMCO on, a PIMCO guest says, private credit doesn't pay as the hazards grow. Are you seeing any signs of an overheated private credit market? And forgive me, there's just about 25, 30 seconds left.
Sure, not really. We are seeing yields come down a little bit in the private credit space, in the very small middle market loans. In the area, in the spectrum where we participate, broadly syndicated loans, there's still very healthy transactions, healthy yields there. And so no need for concern there or any bubble in terms of private credit.
All right, got to run. Hey, listen, Miguel, thank you so much. Miguel Sosa, Head of Market Research and Strategy over at Blue Rock. They've got about $18 billion in assets under management. As you said, private real estate and private credit are the two investment strategies that they work with. And joining us there from San Diego, you are listening and watching Bloomberg.
listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, just about 6-7 minutes to go until we head over to our TV colleagues and count you down to the close on this lovely Monday afternoon. It is lovely in New York City.
Is it? I haven't been outside since this morning. It is really nice. I heard, and my wife told me it was yesterday, that it was going to be in the 70s today.
It's going to be an incredible week.
Let me use the old Google. It's 79 degrees, the Google machine says.
I know. It's supposed to be a gorgeous week, which is really, really kind of sweet. So we're going to head over to our TV colleagues in just a moment, count you down to the close. As we said, it's going to be a busy week when it comes to earnings. Where do you want to go?
I want to go outside. It's 79 degrees.
What would you like to talk about?
Oh, there's a lot to talk about.
Pressure.
There's a sandcastle mansion.
Yeah, that's got my name all over it.
John Gittleson wrote this story.
Man.
He's so great.
The Sandcastle is a clifftop mansion overlooking the Pacific Ocean in La Jolla.
La Jolla.
I actually have been there. Sorry. La Jolla,
it's
California. Listed for $108 million. Yeah, anything on the cliffs in La Jolla is gorgeous. It's listed for $108 million, more than double the current record for a home sale in San Diego County.
Is it made of sand?
I would expect no.
Owned by tech billionaire Darwin Deason, the sprawling estate was formed by combining two adjacent lots that Deason purchased back in 2009. Inspired by the luxurious homes of the French Riviera and Palm Beach, he undertook a full-scale remodel. It was completed back in 2015. The house got its nickname as the Sandcastle for its beige exterior and fortress-like design. It does not look like it is actually made of sand.
How many times have you turned to your wife and said, yeah, honey, it's just time to move on and sell the castle?
Never said that before, but he said
it.
It's time to move on.
He did. His fortune comes from selling an information technology services company. He sold that to Xerox for $6.4 billion in 2010. He said that in an email, so our guys must have reached out to him and gotten some feedback. Where is he going to go? Oh my gosh.
So
what do you do?
After you build something like this, after you combine a couple lots, you're in La Jolla, you're enjoying Southern California, maybe you're doing some surfing.
Does it say where he's going to go?
Take the longboard out to Pipes. You can do that. It's a nice break for the locals.
From California?
Yeah, it's a fun one.
Does he say? Oh, he says. Is it he says? Yeah. My favorite part is the master balcony where I can relax, look out over the ocean, and also look out over much of the rest of the property. He said of the Sandcastle, I take pride in the entire property, but another part I am especially proud of is the nautical-themed bar, which resembles the bar on my yacht.
I think what the challenge is in a situation like this is,
where do we go?
It's built custom for a person, and you need to find someone with the same taste as you to sell it to, or you just sell it to somebody who wants to knock the whole thing down and start over.
It's a tear down, honey. I don't get it, right?
10 bedrooms.
But as you said,
14
where does he?
full bathrooms, 3.5 baths.
Yeah, keep going.
Custom details, French imported fireplaces, crystal chandeliers, an indoor mahogany bar.
Yeah, as you said, where does he go? He's got a yacht where he spends time in the Mediterranean and Caribbean.
So if you only live on a yacht, do you have to pay taxes?
See, this is my base case for living on a boat. You got to pay to wherever you have it docked, so there's dockage fees and you're paying for services.
I guess if you're an American, you always have to pay taxes.
Well, you don't pay real estate taxes. You still pay income. You're somewhere you've got to.
You're going to pay your federal taxes,
right.
But state taxes, I don't know if you'll pay them. Carol just threw a pen at me when she was explaining how she's going to.
I didn't throw it, but it's my
avoid
favorite.
taxes later in life living on her boat.
It's my favorite red pen. No, but I do think about it. Right, you won't have to pay real estate taxes and so on and so forth. Anyway,
I'm not thinking about that stuff yet.
Yeah, I know. Oh,
he has a primary residence in Dallas. He has got vacation homes in Texas, Mexico.
It's got a guest house with 3 ensuite bedrooms.
The Apogee is a yacht. It's 62 meters, 203 feet.
Men's and women's cabanas by the pool.
What do you think of it? Is this a big boat, Carol? 203 feet?
What? How?
That's his yacht, 203 feet. Is that a big boat?
What do you think?
Sounds big to me.
A man-made beach has sand imported from the same source that supplies the sand traps at Augusta National Golf Club. That's pretty crazy. Hey, honey, the sand is here. We used to get sand. My parents used to get us sand for our sandbox. It didn't come from the Augusta National Golf. I'm just going to tell you.
Just go get sand at the beach.
I don't even know where to go. I know where to go. We're going to go over to our TV colleagues. The countdown to the close. The closing bell, in fact, starts right now.
This is Bloomberg.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, alongside Scarlet Fu, taking you to the Closing Bell, a global simulcast. It has started already, Carol Massar. Carol Massar and Tim Stenovic joining us in the radio booth as we welcome our audiences across all of our Bloomberg platforms. And that includes our partnership, Carol Massar.
Yes.
With YouTube.
We were just talking about a house for sale in La Jolla.
Did you see this?
Carol's speechless.
The Sandcastle Mansion that's listing for $108 million. The sand on the beach was imported.
From where?
Augusta National Golf Club.
Yeah.
You're on the beach in California, and you still got to bring in sand from Georgia?
The guy's like...
That doesn't seem very eco-friendly there.
No. What did he say? It's the time to sell?
It's time to move on.
Time to move on.
Yeah.
And then he's moving on to his yacht. Anyway, okay.
As one does.
As one does. Hey, you talk about the markets. I'm kind of obsessed with yields moving up. And I feel like, again, people talking, about 5% now on the 10-year? Concerns about deficit. So, here we go, guys. Thinking about maybe higher rates, and maybe we won't get as many rate cuts from the Federal Reserve.
Yeah, perhaps that's why we're seeing some real estate stocks, some home builder stocks sliding a little bit as a result of these higher yields. And one area of weakness in the market today.
Yeah, and overall, just a sense of maybe, the rally that we've seen, which should continue, is going to start petering out. David Kostin over at Goldman Sachs seeing 3% annual returns over the next 10 years as opposed to the 13% annual returns we've seen over the past decade.
But just back to that home building point, because I think that's a good one, where we talk about this idea of this rotation that we continue to see. And a lot of what we're seeing sold today is a lot of the stuff that people have been rotating in really over the last 5.5 weeks. So I don't know if people know something we don't, because Jay Powell hasn't spoken, unless I missed something. But unless he says otherwise, aren't we still getting those rate cuts?
I don't know. Feels like we're paring them back.
All right. Open Bank, Aspen Tech ringing the closing bells on the NASDAQ and NYSE as the Dow Jones Industrial Average closes out the day down about 0.8%. The S&P down 0.2%. The NASDAQ Composite and NASDAQ 100 holding on to modest gains on the day. But the big outperformance, if you will, that belongs to your small and mid-cap names. S&P 400 mid-caps down 1.2%. Dow Transport's down 1.2%. And the Russell 2000, Carol Massar, down 1.6.
All right, going back to the big caps, the S&P 500, Romaine, and you are seeing, in terms of the breakdown here, forgive me, flipped around on a screen, you have 100...
You were still staring at that house, the sandcastle.
He was actually looking at the boat. Yeah. He's got a yacht. 203 feet.
Okay.
Is this bigger than your boat, Carol Massar?
It's a bit. Mine would be a dinghy next to it. This S&P 500, 81 names to the upside, 419 to the downside. So, yeah, some pretty broad-based selling today, Scarlett.
Yeah, and we did see the indexes close, with a little bit of a tilt higher, meaning they paired some of their losses into the close. But still, when you look at the sector breakdown, very much in the red. Of course, the biggest sector in the S&P, the tech sector, is positive on the day. 0.9% gain, really powered by chip makers. But everything else is down, led by real estate investment trusts, then healthcare, and then financials.
All right, let's get to some of the individual gainers. Your top gainer in the S&P 500, guys, is Kenvue. That stock finishing off its highs, but still a gain of about 5.5%. Company rising the most in about 2 months. Activist investors, Starboard Value. We've seen the activist investors out big time, I feel like, with a lot of companies.
So how do we unlock value in this?
What?
How do we unlock value?
You mean further?
Yeah, I don't know. I mean, because that's what all the activists are doing here. What's the value to be unlocked here?
I don't know.
You combine it with J&J?
Strategic alternatives.
Thank you, Tim.
All the investment bankers around here. It was spun out of J&J already, right? I don't know. So this is according to a person familiar. We don't know the stake. They say it's sizable. I guess you have to stay tuned on this, but nonetheless, investors taking note. And we'll see what more you do, right? So we'll take a look at that one. Spirit Airlines, that one is an outperformer in a big way. The stock up about 53%. This is after the carrier secured more time to address a troublesome debt load that has raised the prospect of bankruptcy. So they reached an agreement with the U.S. Bank National Association to extend a deadline by which the airline must extend or refinance its 2025 bonds to maintain its credit card processing agreement with the bank. So there you have it. But investors moving big time into that one. And NVIDIA, you saw that top gainer in the NASDAQ 100, a top gainer too in the S&P today, guys, up more than 4%. So finishing pretty much at its highs. I'm pretty sure, is that a new record again? Because we've seen this one hitting, it feels like record after record. So just a standout performer in today's session. Yeah, looks like it's at another record close.
All right, Carol's got the gainers. I got the decliners. I do want to start with shares of UPS, down 3.4% today. The company got a rare sell recommendation. Barclays expressed concern on UPS's earnings ahead of those third quarter results, which we get later this week. Brandon Oglensky downgraded UPS to underweight from equal rate, noting likely near-term risk to earnings from continued weakness in demand, and then longer-term challenges from, yeah, you got it, Amazon doing more of its own delivery, and also from competitor FedEx. Also, Lumen Technology shares surged earlier in the session. They were higher by more than 15% early this morning. The company came out and said that it was partnering with Meta Platforms to increase the network capacity for Meta, all ahead of AI development for Meta Platforms. Later in the session, those shares reversed. Analysts said, hey, this was already priced into this stock. You had Raymond James writing that it's, quote, unclear if there's anything incremental in this announcement from what we previously knew was coming to Lumen. Shares falling at the end of the day.
That was kind of a wet blanket. Yeah, I kind of lost track of the stock. Last time I checked, it was up like 10, 12% here.
It had 15%.
And it closed in the red, all because of the analyst.
I guess it wasn't priced. Power. It wasn't totally priced in. If it
some people didn't think it was priced in.
I know. Yeah. VF Corp, parent company of Vans, North Face, Timberland, Dickies, and more, down 7.2% today. JP Morgan placing it on the negative catalyst watch ahead of the company's earnings report. Those are coming on October 28th.
All right, let's take a look at yields. You had massive moves in that space today with your 5-year Treasury up about 10 basis points, your 10 and 20-year up about 11 basis points, and even your 30-year yield also rising about 11 basis points here on the day, 7 basis to 8 basis points on the shorter end of the curve. And you put it all together here, these are some of the biggest moves that we've seen in a few months here. In fact, it matches some of the big moves that we saw at the start of the month when people really started to rethink whether we were going to get as many rate cuts had been priced in. It now seems people are thinking about the exact opposite here. Not so much rate cuts, but the idea that, well, we could be in for a pause and maybe a lengthy one.
Yeah, we just had a story crossing. Apollo's Torsten Slok sees rising chances the Fed will hold rates in November, which would be kind of interesting, right? That's a few days after the elections. Hey, you know what's kind of interesting, guys? I feel like, we came off the pandemic and everybody was like, yeah, we're going to be flexible about how you work at home, work in the office. Increasingly.
Really? I never heard that.
That's because we came back into the office, like July, August of 2020?
Or never left.
It's a little different.
I was here like early June.
Well, anyway, a lot of companies allowed their workers to stay home. A lot of companies allowed their workers to stay home, but 3M now is calling back basically its bosses for 3 days. So they're dialing back a remote-friendly policy. Yeah. And this is, they've got a new head at the company who the previous ones seemed to be like, okay, we can be kind of flexible.
Yeah, 3 years they were able to, if you worked at a desk, you could work remotely. It was called, the policy was called Work Your Way, but now they're going to be required to work the way that Bill Brown
As soon as the policy has a name, that's when you know you're in trouble.
Well, you can no longer work your way. You got to work Bill Brown's way. He took the reins back in May after that turbulent period of sluggish growth and legal setbacks. It's all fine until a company starts to not do so well. And then
or the economy turns and everyone's like, you know what, let's get them all back in.
And we should point out that 3M does report tomorrow on that front, so maybe we'll find out how well or not well they're doing.
Yeah, that's a good point. Yeah. Well, maybe that means fewer trips, fewer of those work vacation trips. Remember how those have become a big thing? There's an airport in New Zealand that is tired of cars clogging up its drop-off zone. Like if you go to JFK or LaGuardia here, it's like 3 cars deep. You can't even get in to drop off someone or pick someone up. Now they're limiting farewell hugs to 3 minutes at its drop-off zone.
Wow, what a place to live. The Uber driver never gives me a hug when I get dropped off.
You don't have loved ones to drop you off?
A 3-minute cap on hugs?
Yeah. I mean, it's meant to be a friendly reminder to please use the car park if you actually need to do more than, say goodbye. But otherwise, we want you to keep moving.
What exactly would they do more of, Scarlett?
I'm not going to answer that.
I think this is just something unique about New York City, I think. Because if you are in a committed and loving relationship, you do not want your partner to have to go through dropping you off at the airport. It's
that's a good point.
It's
You're
a gift to them not to have to drive you to the airport.
I love you so much that I'm going to take myself to the airport.
Yes. And then you're just looking for a hug from the Uber driver.
What is it? It's just kind of rough.
Can someone give Tim some love here? What's happening?
Tim has thought through all of this very carefully.
What's your Uber rating, by the way?
It's weird. I'm banned. I don't know why.
All right, guys, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We call it The Closing Bell, and we will see you again, same time, same place, tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. That's Carol Masser. I'm Tim Stenivek. I'm not really banned from Uber. Okay, I just need to clarify that.
You're not banned.
No.
I've seen you use the
I do make you.
People pick you up.
I always make you order the car, though.
So there's a reason, maybe, perhaps.
Vice President Kamala Harris has been ramping up her outreach to black men, pledging to provide outlets for economic security. Polls show that Donald Trump is gaining support among black voters. Her outreach comes as Trump is cutting into that traditional support. About 15% of black likely voters indicated that they plan to vote for Trump in this election. It's an uptick of 6 percentage points from 2020. That's according to a New York Times Siena College poll that was published back on October 12. We've got with us Khalil Thompson, founder and executive director of Win with Black Men. It's a political action committee that looks, in their words, to increase the involvement of black men in the political process. He is hard at work right now because we actually caught him on the Acela.
Oh, he is on the Acela.
Oh, he's on the train right now.
That is so wild.
I hope you're not in the quiet car. Going from
not in the quiet car.
All right, you can go back to the quiet car when the interview. That is the secret to a great train ride, by the way.
I love the quiet car.
The quiet car is just
sorry,
it's amazing.
Can't talk.
Sorry, yeah, can't talk. Sorry, can't talk. Have to sleep.
Can't hug at the airport. You can't talk on the Acela.
Good to have you with us. The narrative has certainly shifted in recent weeks. How would you describe what's going on, at least according to the polling, when it comes to black men's support or lack thereof of Kamala Harris and instead for Donald Trump?
So, I'm not going to get on the roller coaster because I know we can stay on that for a very long time and see the sample sizes are where you're polling these people if you have a landmine or not. And I think the most important thing that we have to do is focus on getting people out and making sure they vote. Of course, I want people to vote for who I believe is the best candidate in Kamala Harris, but at the end of the day, we just want people to go out and vote.
I am curious, Khalil, when we think about Harris versus Donald Trump, Kamala Harris versus Donald Trump, and I know you can never lump any group of voters into one pot. Having said that, what are we finding out when it comes to black men specifically? What matters to them? What makes them decide who they are going to vote for? Do we have any insight on that?
That's why I think this conversation is critical on Bloomberg right now. It's about the economics. It's focusing on where one candidate is going to be able to provide the best economics for individuals as they're thinking about what's in the best interest for them and their families. And so what Kamala Harris, I think, is laying out, and the only black male agenda that any presidential candidate has ever done before, is being very clear and saying if up to $1 million for givable $20,000 grants to entrepreneurs, and increasing the tax credit from $5,000 to $50,000 for small businesses. Right then and there, on those 3 points alone, that should say that any black man in this administration or future administration is going to take it seriously for when she comes and wants to speak about the issues. It's the economics first.
Khalil, we're having a little trouble hearing you. The Wi-Fi on the Acela is not. I don't want to say this because I've been on it for a few years, Carol, but so, you're going fast.
It's a moving train.
It's a moving train. It's not always great. We're going to work to get Khalil back. But I think what's important to note is we have heard a change in tone from Harris and supporters of Harris, who are going around specifically places like Pennsylvania, Michigan, and trying to reach certain groups of people. Mm-hmm. And I think that what we're seeing, again, this is polling, and Khalil says, look at the sample size with these polls and make sure to take polls with a grain of salt. At the same time, we are seeing the former president, Donald Trump, cut into traditional groups that traditionally have voted for Democrats.
Yeah, it is certainly interesting to see. And, you know, I feel like when it comes to black men specifically, you know, we've spent a lot of time talking about former President Barack Obama, who recently was in Pittsburgh on the campaign trail, made some big comments, you know, and then on kind of a side room had a conversation where I think folks said he kind of got real with a lot of male black voters. Here, just to, as a reminder, here's what he had to say. This was back on October 10th, again, in Pittsburgh, former President Barack Obama.
Part of it makes me think, speaking to men directly, part of it makes me think that, well, you just aren't feeling the idea of having a woman as president. And you're coming up with other alternatives and other reasons for it.
That was former President Barack Obama just a little over a week ago out in Pittsburgh, saying that really trying to encourage black men to vote for Kamala Harris.
Yeah, exactly. Well, Khalil, I want to bring you back in. We're talking with Khalil Thompson, founder and executive director of Win with Black Men. Hopefully, it's a cleaner audio. Khalil, you know, I've listened to some interviews with other black anchors, female and other, who kind of made some thing about black men not wanting to vote for a black woman. Is that true? Is there something, like, what's going on? Help me understand this.
Sure. I don't think we're speaking to anything that's just particular to black men. I think you're finding there are some men who have some misogynistic and sexist views that they don't want to, and they don't see a female president. I don't think that's just unique to Kamala Harris. We saw that in 2016 with Hillary Clinton. We saw that in Georgia with Stacey Abrams, who I think would be great executives to lead not only states but in the country. And so, you know, what we need to do is really hone in on those black men who are turning out to support any candidate, but specifically Kamala Harris, focusing in on what maybe their needs to stay at home, maybe sit on the couch and sit this election out, which may not be about misogyny or
yeah. Khalil, Khalil, we apologize. Unfortunately, we're doing a disservice to our listeners right now because we cannot hear you clearly. So we're hoping that we can either reconnect or reconnect at another time, because we would certainly love to talk to you, certainly before the vote come November.
Please come back and join us.
Yeah, exactly. Khalil Thompson, founder and executive director of Win with Black Men, joining us from the Acela. He was en route or coming back either from Washington, and so we understand why it's a little bit difficult. Technology can often make it all work, but it didn't this time around. So we apologize to everyone.
15 days to go, Carol.
Yeah, 15 days to go. You know, it's very, very close. If you take a look at polling and so on and so forth. Yeah, it's about the national race. It's about the key swing states. Feels like on so many races, it's very, very close. Margin of error can make it swing either way. I've been reading some things about, hey, listen, remember polling, you know, there's a Donald Trump factor perhaps, and that when he is in a race, that things can go dramatically very differently. I don't know if there's anything scientific to that, but it's interesting, and I just think I don't know, we're just gonna have to wait until November.
It's being described by our own Nancy Cook and Josh Wingrove as a frenetic blitz of splashy events for Donald Trump and unconventional media appearances. For Kamala Harris, she, according to them, is zeroing in on defending the Democrats' blue wall of Pennsylvania, Michigan, and Wisconsin. She's got new targeted messaging aimed at the few remaining persuadable voters who could make or break the 2024 election. She's going to hit all 3 states today. It's part of a series of events in those critical suburban counties.
Yeah, campaign officials, political operatives, all anticipating a jump ball election decided at the margins in 7 battleground states by whichever candidate can turn out the most supporters and infrequent voters. I mean, at this point, there are people who know exactly, you know, they've known for weeks, they've known for months, they've probably known for the past year how they're going to vote. And then there's a lot of folks, and the undecided voters have gone.
I just want to know what they're waiting for. I'm not trying to
it's a smaller pool.
There's an old SNL skit about the undecided voters that's pretty funny. This is like, you know.
What is it?
Oh, go look at it on YouTube. It's pretty funny. But it's like before Trump even ran. But it's funny because it's like, to me, it's funny. You get to the point where, you know, how much better do you need to know these candidates who at least one of them has been in our worlds for the last 8 years, pretty much nonstop, last 9 years.
Yeah.
What else do you need to know? I have no idea. I want to meet some of these undecided voters.
Final 2 weeks will highlight Trump's efforts to lock down the votes of young men, black men, and Latinos. his campaign strategy dating back to the Republican primary. Kamala Harris, Vice President Harris, will spend her time trying to shore up her support among suburban women, black voters, and moderate Republicans who traditionally have been turned off by Donald Trump's record and rhetoric.
Elizabeth reminding me that Rick Davis, Bloomberg contributor, often says that the biggest undecided voter is between voting and not voting, which I think is a really good point.
Which
so
is a
getting
big
people
deal.
to turn out. Yeah, huge deal.
To actually, make a decision versus saying, I'm out, basically. All right, we apologize for some of those technical difficulties, folks. You are listening and watching Bloomberg Business Week. This is Bloomberg.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P lower today, but NASDAQ late day gain, finishing the day 50 points higher. Right now, NASDAQ at 18,540 for the NASDAQ Composite Index. That was a gain of 0.3%. The NASDAQ 100 Index, full of those big tech names, up 0.2%. But to put it all in perspective, the S&P fell 10, down 0.2%. The Dow was down 0.8%. 1%, tumbling 344 points. 10-year 4.19% on the 10-year. The 2-year 4.02%. Gold little change, down under 0.1%. 27.19 the ounce, and West Texas Intermediate crude up 1.6%, 70.35 a barrel. The activist investor Starboard Value has built a stake in consumer products company Kenvue, seeking changes that would boost the Tylenol maker's stock price. Today we had shares of Kenvue advancing by 5.5%. Again, recapping stocks end of the day mix. Nasdaq higher, but the S&P down 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. It is Bloomberg Business Week, and I want to know, Carol Masser.
Yes.
What you were doing when you were in 9th grade.
First year of high school.
Yeah.
I don't know, just trying to...
Gymnastics?
Gymnastics.
Yeah.
Cheerleading.
Okay.
Trying to get A's. Getting A's.
Were you anywhere close to creating an AI-based handheld pesticide detector?
That would be a no.
Okay. That's what Suresh Subhash has been up to. He's in 9th grade, and that creation helped crown him the winner of the 2024 3M Young Scientist Challenge. Also includes a nice $25,000 cash prize,
Not
a trip
too
here to
shabby.
New York,
Yep.
to ring the bell at the New York Stock Exchange, and
yes,
gets to hang out with us, which I think is just the biggest prize that's around.
Suresh Subhash is the winner of the 2024 3M Young Scientist Challenge, and Aditya Banerjee is Senior Research Energy of the Corporate Research Process Lab over at 3M. They both join us in our Bloomberg Interactive Broker Studio. Very cool to have you both here. Congratulations, Suresh. First, I want to ask you, Aditya, tell us about this challenge, how long you've been doing it, how it came about, and why you're doing it.
So the 3M Young Scientist Challenge has been around for 17 years. This is my first year doing this mentorship, so I'm just awfully lucky to be paired with Suresh, and it has been an awesome experience. Our goal as part of the 3M Young Scientist Challenge is to nurture and just work with such bright young minds, and just help them bring their imagination, their creations to life. So, I mean, we live by science applied to life. So they have all the science innovations in their mind. We have some experience in getting the science to people's hands.
Right.
So we hope that we can bridge the gap for them to take his concepts to hands of consumers and help them in any way possible to make that journey smooth.
Well, Suresh, tell us about what you have sitting in front of you, because it looks like an iPhone attached to some sort of gizmo here. What's going on?
So my device, my project, it's called Pestiscan. And so what it is at home, people can scan for pesticide residues on their produce items. That's the real core concept here. Because there's a lot of contaminants like pesticide residues that can stick around on produce after washing, where they've been linked to health issues like certain cancers and Alzheimer's, Parkinson's, neurodegenerative diseases along those lines.
You can pick that up, and you can. There's a camera right there in front of you. For those watching on YouTube, Elizabeth's going to get a shot of this thing. It's pretty cool. So there's an app that goes with it. There's also some hardware there. It uses a type of technology. I practiced so many times saying this type of technology.
Say it.
Can you say it for me, please?
Yeah, it's spectrophotometry.
Spectrophotometry?
Yeah.
And what does that do?
So the idea is different materials reflect and absorb different wavelengths of light. So Pestiscan can look for those wavelengths that are reflected and absorbed by pesticide residues.
So, okay, so we are very lucky that we have a lot of food here at Bloomberg and a lot of fresh fruit, and we all tap into it. I've just had a banana and often tap an apple or some other things. We had some grapefruit this morning. You picked up an apple in our food court up in the link on the 6th floor. And so show us how it works and what you do and then what you found out.
Yeah, so for using the actual device, you just connect the app to the device. You just turn both on. You point the device at the produce item, and then you tap scan. And in a couple seconds, the results are back. And this apple had no pesticide residues on it at all.
Score.
Which is amazing, because I don't know if these are organic apples.
I don't know that they are either.
But that's good to know. It does. There is a sign upstairs that says, please wash fruit before eating it. But
Which
that
we
might
always
be because
do.
Sometimes, people go and like check the peaches to make sure they're soft.
I check out a few things. It's really fascinating. So, how did you kind of come up with the idea? How'd you pull it together? And how did you use your mentor to help you?
So the whole concept really started when I was having a conversation with my mom. So she was insisting that I wash my produce before consuming it.
Right.
And yeah.
Good mom.
Okay.
Good mom.
You gotta wash your produce.
So go ahead.
And my question was, why and how effective is it? So looking into that, I saw that there were a bunch of contaminants like pesticide residues that can be on produce, but washing isn't necessarily completely effective. The residues do stay on afterward. So the idea is, if we could detect them, we could make sure that we weren't consuming them. And that's really where the idea for Pestiscan came from. So after I started building the device and I joined the 3M Young Scientist Challenge, my mentor Aditya has been really helpful with this, especially when I've gotten stuck. One big time was when I was designing my machine learning models, and these are what take the actual data from the sensor and then turn that into results, what you'd see on the screen, whether the device has pesticide residues, whether the produce has pesticide residues or not. And he's helped me when I get stuck. He's helped me get unstuck.
I want to ask you, so what's the, balance of here's how you do it and solving the problem and helping him to say, you've got this problem, let me steer you so that you figure it out yourself?
You got that exactly right. Like I said, our goal is to help nurture them. So I would pose it as like have you thought about this? Have you thought about that? And he, being a very meticulous and very energetic person, he would do his homework and he would make sure he follows up on that. And next week when we chat, he would inevitably come up with a solution.
So Suresh is in Georgia, Snellville, Georgia. You're in Minneapolis.
Yep.
Were you guys meeting like on Zoom once a week? How did this work?
Yep, yeah, we would meet after his school's done once a week and have a conversation about what he has been up to last week, anything he wanted to discuss with me, any next steps and stuff like that.
Can you talk a little bit, Suresh, about how you got introduced to this program? Because it's my understanding that you've known about the Young Scientist Challenge from 3M since you were in second grade?
Yes, I learned about the 3M Young Scientist Challenge when Gitanjali Rao got nominated as Times Kid of the Year. And when I learned about it and what the challenge really stood for, what it was doing, I thought that this would be a great place for me to submit my inventions. That was really because I've always wanted to leave an impact on the world.
Nice.
In a good way, to leave society a better place. And that was, I thought the 3M Young Scientist Challenge would be a great place for me to start with that. So I skipped 5th grade, so I wasn't able to put it in then. 6th grade, our family was in India, and we weren't able to get things figured out. 7th grade, I did apply, but it didn't quite work out. And this year, I was able to get it in, and everything worked out, yeah.
Did I hear you say inventions, plural?
Yeah, so I've worked on a couple of things before.
Okay.
Pestiscan may be the one single project that I've put my most time into. So I've built a couple things before. I made one robot to deliver books that was probably the runner-up to this and how much time I put into it. I spent 4 or 5 months on that. I've spent about a year on this latest version.
So what's the commercialization of this? Because I think I could see, I would love to have one in my home, and I'm sure you would.
Or even just an app that could do this using technology that exists inside a phone already, right? Like, so you're at the grocery store, you're like, oh, this is good to go.
Exactly, right? Like we do barcodes of things to find out pricing or whatever, or information. So how do you guys think about, like, just 3M, who's known for like all their different products, and it's not just Post-its, it's a lot of different things. So I'm just curious, do you see something like this and say, okay, there's commercial applications?
Well, for sure. I mean, part of our conversations was how do you simplify the prototype? That was one of the driving questions that he seek to answer during the summer. He started off with making the module simpler, something that you can just clip onto your phone,
right?
So that it can be used for a consumer. He did a lot of work in driving down the unit cost of each of the modules, and he already has plans to drive it down even lower. So he is already on it.
Well, what do you guys do next? I mean, these guys know I'm like super obsessed with Shark Tank and when people pitch their ideas. But what do you do to help him? Maybe is it on his own, or do you guys work with him to kind of get it to the next step?
So he would be driving a lot on his own, but we are always there to support him whenever there's anything that we can help out. Me personally, 3M as a company, we would definitely be more than happy to help him out. And also, the 3M Young Scientist Challenge alumni, they have a grant program that has been set up. So there are a lot of alumni who leverage that to fund their programs in the future as well. So that is something that's all set up that can be used.
So, what do you want to do?
Like, are venture capitalists knocking on your door?
You've got a few more years. I imagine you want to continue your education. What's the plan here?
So the big next steps are I'm trying to shrink this quite a bit to where it would be far more portable and easier for a consumer to carry around. And then from there, also just drop in the cost to where it could easily go into people's homes. Those are my key plans for this device in particular.
How much, what's the cost associated with this prototype? Like, how much would this device cost as is now?
So as of now, for this setup, if I were to make 100 of them, that would be $75.
That's not bad.
But I have a plan laid out to where there's a solution. I can put this onto a printed circuit board, which would make this all one singular piece. And that would bring the price down to roughly $35, but I'm looking forward to, in the future, reach a price tag of maybe $20.
Like, very cool. Right? Like, I don't, I just think about, do you have it in the supermarket where people can, I don't know, or does everybody have their own and check it out? Really, really cool. Aditya, one thing I want to ask you, we often talk with folks about the importance of STEM education, and companies, whether they're out in Silicon Valley or thinking about the next generation of workers that they need. Is this part of why 3M is looking to do this?
Yes, yes, absolutely. I mean, we seek to educate or reach out to folks about science and how it's integral part of our life. We have a great science advocacy team within 3M as well. And that's also one of the reasons why during this program we get to meet young, brilliant minds like him, and we try our best to, like I said, nurture and mold them and inspire them to do something. Like he said, like science is part of it, merging with the society. That's another huge thing that we see. So what he's doing,
pretty cool
making
stuff.
Society bigger, society better, that's what we hope for.
The bigger impact. Sarish, congratulations. Sarish Sabash, Aditya Banerjee of 3M. Guys, thank you so much. This is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks took a breather after notching their longest weekly rally this year. Traders gearing up for a number of very key earnings reports this week, including Tesla and Boeing and United Parcel Service. Turned out to be an update for the NASDAQ Composite Index. NASDAQ scoring a gain today of 0.3%. That was an advance of 50 points, but the S&P, to put it all in context, was down 10 today. S&P was down by 0.2%. The Dow dropped 344, down by 0.8%. 10-year 4.19%, with the 2-year 4.02%. Gold down $2 the ounce to $27.19. West Texas Intermediate crude up 1.7%, 70.40 for a barrel of WTI. As for the economic backdrop, Miguel Sosa is head of market research and strategy at Blue Rock, and he was a guest earlier today right here on Bloomberg Business Week.
I think investors are seeing a robust and expanding economy, a healthy economy, and much more moderate inflation, which over the long term, over the medium term even, we should see a gradual reduction in interest rates. Whether it happens this year or the beginning of next year, it's going to be a slow process.
Miguel Sosa of Blue Rock. McDonald's says it is not taking sides in the presidential election following Donald Trump's visit to a Pennsylvania restaurant yesterday. The burger chain put out a statement saying that it does not endorse candidates for elected office and that it remains true in this race for the next president. In McDonald's words, quote, "We are not red or blue, we are golden." McDonald's today down 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stanovic live here on Bloomberg Business Week. We are on radio, YouTube, and of course, Bloomberg Originals. Well, I got to tell you, this story just speaks to me in a big way. Over the past...
Tell me why, Carol.
Because I love buying, I don't know, vintage. I love buying clothes that somebody else already owned. It's been a thing, partly because I think it's better for the environment, but I just also think it's
I hear they call it upcycling.
Upcycling. Well, over the past few years, there's been one big bright spot in apparel consumption patterns. U.S. shoppers, especially those under 40, have shown a burgeoning interest in old clothes. But as the title on this story in Bloomberg Business Week, from Bloomberg Business Week by Amanda Mull, it says, why is it so hard for clothing resale platforms to make money? I think that's a great question. Amanda is Bloomberg Business Week senior reporter, and she joins us here in our Interactive Brokers studio. First of all, set the scene, because it does feel like resale shops, they're like everywhere.
Yeah, the clothing resale business in the United States is bigger than it ever has been before. Especially consumers under 40 really, really like buying secondhand things, whether that means like true vintage or just like something that somebody bought last year and doesn't want anymore.
Yeah, like wore it once, you can tell.
Right, exactly. So the secondhand apparel business in 2023 grew at like 7 times the rate of the overall apparel business, and vintage shops are sprouting up. Vintage markets that sort of pop up at college campuses and stuff are like super, super popular. And then online, you have all these different services that allow you to resell clothing or to buy something that somebody else doesn't want. The only problem is that those platforms generally do not make a lot of money, if they make any money at all. They're not like stable, profitable businesses by and large.
It's just like childcare.
What?
You know, you
What do you
spend
mean?
so much money on childcare. It's so expensive, and nobody ever makes money doing childcare.
Are you serious?
Oh yeah.
All right.
We've had Bloomberg stories about this. It's so expensive, but it's so difficult to run. The people who work there get paid nothing, but the people who send their kids there pay so much money.
All right, so
The economics don't work.
So why doesn't it not work for clothing resale platforms? Why is it? It seems to me that it would be a no-brainer. Why is it not working?
Well, there's a few different issues. There's like 2 basic business models that happen with resale clothing online. One is like an inventory-heavy model, where sites like The Real and ThredUp take in a lot of inventory, and then they're shouldering all that cost to like sort, clean, photograph, list, describe, measure all of that inventory.
And in some cases, send money to the people who sent it into them before their stuff is sold.
Yes. In some cases, they pay for it up front. In other cases, they pay for it like on consignment when it's sold. But that is just like a ton of fiddly little detail work.
Yeah.
And it's detail work that like every clothing business has to do. But most new clothing businesses, you photograph and describe and measure something once, and then you can sell like hundreds or thousands thousands of units of that thing.
Right.
For used clothing, you have to do that every single time for every single unit that you sell. There's no like economy of scale there.
Right.
And then for inventory light platforms like Poshmark, Depop, places like that, it's more of like the eBay model. But that brings with it eBay problems. You have to have people who are going to photograph and measure and describe things accurately, and then actually send them out when they sell. And relying on people to do that is difficult. And the clothing business, secondhand, isn't a high margin business. It's not a high price tag business. So you're just dealing with like very small amounts of money for a lot of work.
Based on the reporting that you did, does one of these models work better than the other?
Yeah, the inventory light model, the sort of like eBay-esque model, is definitely the way to go. The main problem there is like developing enough tech tools to like really make it easy for people to like accurately list their stuff, and then making it easy for them to send it out later.
Is fraud and authentication an issue then? I know eBay with selling shoes years ago made a big deal about having this sort of like authentication way to authenticate that the sneakers you're buying on eBay are actually the sneakers that are advertised.
Yes, especially for high-end and designer platforms that like specialize in those things. Counterfeits are a huge issue, and counterfeiters are getting better and better and better all the time. So you've got designer. This is really the problem for designer brands, though, because they have to figure out something to put in their clothes that makes it easy for a third party to tell if it's real or not. There's only so much that a middleman can do because they're dealing with like detail standards that they didn't set and that they aren't fully apprised of. And like high-end brands don't really want their stuff to resell on these platforms, so they're not like hugely helpful in helping the middlemen figure out what is real and what is not.
Although on one hand, you might buy, a designer thing, resale, lesser, cheaper price point, and you might say, oh my God, I get it, I like it, and then you start thinking about, okay, I'm going to go to the store directly, right? Like, so you do think that there is a way to do it. What I want to ask you is, though, how much, I sometimes look at some of these platforms, and I'll be like, there's so much stuff I don't want.
Right.
It's like you cleaned out your closet of the things you didn't like, and now you can buy them, and nobody wants it. So how much of it is that there's just product that nobody wants?
A lot of that is an issue, and it's especially become more of an issue over time. There's always going to be stuff in people's closets that like doesn't really have like a buyer out there. But the more that fast fashion and really, really low cost things flood into people's closets, the more that is what's being put on these platforms. And like nobody really thinks that stuff is worth anything new. So used, people perceive it as worth even less, which is a real problem when you're like searching for something good, something that's like real leather or real wool or 100% cotton, and you're trying to like figure out what search terms to put in, and you end up with like a lot of sort of stuff that you don't want, and it creates a lot of noise in the shopping experience.
One thing that you write about, and I thought of it, it's in your piece, is this idea of brands doing it themselves, like Levi's, for example. I think of Patagonia and Wornwear. You can go and buy, you can sell your stuff to Patagonia, get a gift card, and then it shows up on the website a few weeks later. And there are markets for that. Is that the future of this?
According to the analysts I spoke with, one of whom has consulted on these types of programs before with brands, not really. It is still like a really tough question of unit economics because the brands are taking this stuff back and they know more about it and have more expertise in it than a third-party platform would, but it's still an issue of every single piece has to be evaluated, photographed, listed, sent. Like you just don't get the economy of scale that you get with new clothing. And so the person I spoke with said that brands sort of understand that this is more of a branding and marketing proposition to improve their stature in shoppers' minds instead of a revenue stream.
Real quickly, we've just got about a minute left. Amanda, I do wonder if this is one instance where brick and mortar, like a vintage place or resale place, they can actually make money because you can go in, you can see it, you can feel it, you can try it on, and you might be more inclined to buy a bunch of stuff versus online where you're like, do I really want to do it?
Yes, brick and mortar has a much better business model for secondhand because they skip a lot of the piece-by-piece work that is required to list things online.
Right.
Whether you're a new clothing store or a used clothing store, you're going to have to take stuff in, hang it up, make sure it's in the right place in the store. A lot of that work is replicated between new and used, whereas with online, there's just a much larger problem. And then people can come in and try stuff on and look at it in person, so you don't have an issue of misrepresentation and lack of shipping.
Yeah.
So
I like to try it on, feel it, check it out.
Yeah.
You can get some great deals.
Yes. In-person works a lot better.
All right, time to go shopping. Amanda, thank you so much.
Thank you so much for having me.
She's amazing. Amanda Mull, Bloomberg Business Week senior reporter. Check it out online and on the Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody. Carol Massar, Tim Stenevec, live here in our Bloomberg Interactive Broker Studio, getting ready to wrap up on this Monday, October 21st. We got a lot of earnings coming in.
I was not going to go to earnings.
Where did you want to go?
This is the fifth most read story on the Bloomberg terminal in the last hour. It's about WNBA players who are opting out of a contract in a push for higher salaries. Randall Williams wrote this story.
Oh, the WNBA.
Yeah.
Oh, yeah. A day after New York Liberty topped the Minnesota Lynx in a fierce battle for the WNBA title. Another fight brewing. Listen, there's so much momentum behind the WNBA.
You're going to save so much money, too.
Well, and rightfully so. We've talked about the audiences for WNBA have really picked up. They've experienced a surge in ratings and attendance. They recently signed a media deal worth 6 times its previous one, and the union says it has a handful of priorities for negotiations, including getting a cut of revenue, higher salaries, and improving benefits for retirees and pregnancy.
It's incredibly important.
Yes.
The league's players voted to opt out of their collective bargaining agreement 2 years before it's expiring in a push for a more lucrative deal. That's according to the players' union. Don't worry. This opting out will not impact next season. If the two sides reach a new accord, it will go into effect in 2026. If they can't reach one, there might be a lockout. But there's a lot of time, right? This is a lot of time.
Yeah, I think so. Well, it gives people time to work without being disruptive, right? It also says the league is on the cusp of adding 4 teams. The Golden State Valkyries will debut next year. Teams in Toronto and Portland will play in 2026. WNBA is currently scouting locations for its 16th team.
With CBA negotiations set to begin soon, there's a possibility that the union and the league will not come to terms. The NFL, NBA, and MLB have all had work stoppages over the last 15 years. The WNBPA's executive director, Terry Carmichael Jackson, said the union is prepared to do the same.
Very cool stuff. Go WNBA, because, man, they are just on a roll. And it's really, really cool to see the media, the attendances. I feel like it started at the college level, and it's continued into the professional level.
The current CBA was signed back in 2020. It doubled the max salary. Wow, the max? $242,000.
Yeah.
Interesting.
Yeah. I mean, the difference is...
That's a huge difference.
Yeah, exactly. Most read story in the past 8 hours on the Bloomberg terminal has to be the one we talked about with John Authors. Decade of big S&P 500 gains is over, according to Goldman strategists. And so they've done some research, crunched some numbers, and they expect annualized nominal return of 3% over the coming 10 years. See stocks facing more competition from assets, including treasuries.
I'm glad you said treasuries.
Why?
Because I want to talk about this Torsten Slok piece.
Go to it.
Michael McKenzie writing about Torsten Slok. He's been on our program before.
Mm-hmm.
He's over at Apollo. The chances that the Fed will leave interest rates unchanged in November are mounting as the U.S. economy powers ahead. This according to Torsten Slok, chief economist at Apollo Management. Plenty of reasons for the robust U.S. economy in Slok's view. He's been talking about this for a long time. He had notes out months ago that said, slow down. What slow down? A dovish Fed, elevated share and home prices, narrow credit spreads, as well as, quote, wide open corporate financing in both public and private markets are just some of them.
Swaps are pricing in right now less than a quarter-point Fed rate cut next month. Remember, the next Fed meeting is a few days right after the November election, so interesting. He writes, going back to Torsten Slok, he did a research note. It came out over the weekend. The bottom line is that the expansion continues, highlighting that the Atlanta Fed currently estimates third-quarter GDP growth of 3.4%. He sees the U.S. remaining on a no-landing trajectory where the economy keeps growing and inflation reignites. I feel like we've started to see some signs of that, and I think that's also why you've seen a pullback to some extent about expectations, what the Fed will do. And I feel like this is narrative reset 2.0 because it happened late last year, almost a year ago, going into the new year of 2024, new year meaning this year, and there were such aggressive expectations about the Fed doing, was it like 6 rate cuts? That didn't
was like
out.
Yeah.
Are you yawning?
No, at the beginning of the year. I would never. At the beginning of the
You
year.
stifled a yawn.
Nah, it never happens. At the beginning of the year, that was what everyone thought it would be. And Torsten came on our air and was like, no, they shouldn't cut rates. They should raise rates this year.
And what's interesting is there was definitely a reset. We have not seen, it took a while, right? The Fed just recently made its first rate cut after several years. What?
I got a great story. I'm putting it in the chat. Okay, Carol?
Is this another one?
This is another one. It just came out just in the last 20 minutes. Elon Musk is sued over Blade Runner imagery during the robotaxi unveiling. Hollywood filmmaker Alkin Entertainment is suing Elon Musk, saying that Tesla used imagery inspired by the 2017 movie Blade Runner 2049 at a recent event, even after permission was denied.
Wow. The production company, which has also financed and produced films such as The Blind Side, filed a lawsuit accusing Musk of copyright infringement, saying it specifically declined to grant permission to use the images. Alcon also alleges that Tesla did not reach out for permission until the day of the event, which was held on October 10th. Musk, Tesla, and Warner Brothers Discovery, which hosted the event in a studio lot, are all listed as defendants.
The long-anticipated Cybercab unveiling earlier this month